Morning, everybody. Hope you guys are doing well. So, we don't have news today, and we have 8:30 news on Thursday, 8:30 news on Friday. So, decided to just run a tape reading / backtesting stream today in the public channel. So, if you know how this works, then you can put any questions you want into the chat, and we'll try and go over it. You can kind of watch the screen as well. If there's anything clean, may take a setup, probably not though. Just given the news profile, but I can quickly go over the daily bias for today, which we've already basically done majority of it. But if we look at the hourly chart really quickly, let's go to the daily. So daily, we got this swing high, also this inefficiency up here, but more importantly, the hourly chart. What's the order flow in the hourly? Well, yesterday came down, swept previous day low, expanded up into that drawn liquidity that we had. Yesterday morning, I sent out that daily bias. If you go back to that old post, you'll see the same thing. And then retraced back into last down closing candle, fair value gap. It's really, really high resistance, and you can tell by how far we retrace into the dealing range. So we have a dealing range here, retraces all the way down into this last down closing candle, which would be the order block. Same thing in here. Actually getting a turtle soup there with SMT, same thing in here. But starting from midnight open, we have an open manipulation down into an inefficiency, also on the 15-minute chart, inefficiency in here during London session, and then basically expansion all the way up. I was looking for a retracement in the beginning of New York down into this gap, and then expansion to the buy side, but looks like 930 just kind of expanded first right into the drawn liquidity. And obviously Asian is never going to be most times a good target. It's not going to be one of those liquidity pools that are important for the entire New York session. It's either going to be London, PM, previous day, previous week. Asian session is not really super important to me when I'm looking at draw. So whenever you see kind of stacked liquidity pools like this, normally you're going to go for, if it's PM session or London session, then that will be the true drawn liquidity. Then obviously previous day high, and then the daily buy side above us. So given that we've already kind of expanded towards the draw, I'm looking for a retracement, potentially down into discount here. We have this order block I'll be marking out, as well as this inefficiency here, which would be your first presentation gap. Top right, there we go. So I saw one question in general chat. Let's see if I can go over that really quickly. So, Hello Flux, you've said that session bias over daily bias. How can I determine session bias? It's really about using lower time frame charts. So I would say if you have a good understanding of the hourly and the 15, that's technically all you need. Someone may disagree, say you need the daily, which is true. So I think if you just glance at the daily, get a good understanding of where we are relative to, IP to 20 to IP to 60. What's the order flow on the daily? Is there anything obvious? Swing high, swing low, inefficiency that price is likely to draw to. That'd be a good draw on liquidity or just a general bias. But session liquidity is going to be the most important, at least for me, because I'm not trading the entire daily range. I'm only trying to capture and be 1 or 2 hours of price action. So meaning I only need, where's the next hour or the next 2 hours candles going to displace towards. So if I can figure that out with great conviction, then normally it's going to be way easier than trying to say, okay, if the daily's going here, but the session is going to manipulate first. It's just not super important. So understanding things like ERL to IRL, time dynamics during the day, such as what did London session do? Because if London session did something obvious, then New York session will do this. If then statements. Ephesians also is really, really known for his London protraction profiles and how he uses that. So I strongly use those most times, like classic protraction, delay protraction, and then the Judas swing model. If you learn those kind of different London sessions, that's going to be important. And then really just looking at the 1 hour order flow. If you treat the 1 hour chart like the daily chart, looking at the order flow, what PD rays are we holding, what PD rays are we not holding, where's the SMT, all that stuff is going to be really easy. I'd also have a couple videos on how to determine like the 1 hour buys. But I really think if you are struggling with it, just look at the 1 hour and the 15. If you can determine the next couple candles on there, that's really all you need. Especially you don't have to be trading, multiple different sessions. So we did run up the ERL here, and that would be right at 9:30. Also traded into this inefficiency. I don't know if we have SMT yet. We do have SMT with previous day high. So slight SMT here. I remember, given the news profile, maybe a little bit difficult today. So I've chosen to just do this kind of Q&A instead of normal tape reading stream. Here goes the hourly chart. We do have some low resistance down here. But I'd like to see the continued buy side move. Just kind of a deep retracement, I think, into this inefficiency with the order block in discount. But Sibi's forming here. I don't know. Well, I'll just continue to watch anyways. 5-minute imbalance as well with the 5-minute order block. Let me mark this out actually. $9.25, $9.27 breaker. Okay, so you could technically look at this as a breaker or change the state delivery. I look at this as just one clean order block. Now, the reason it wouldn't be a breaker is normally with breakers, you want to see it manipulating into a higher time frame PD array. So if we have something like a 15-minute gap, and then on the 1-minute chart, we have this kind of signature, and there's a reason there's a drawn liquidity above us, then this would be the breaker, right? So just because we have a low, high, lower, low, and then expansion up, that doesn't mean it's always a really, really clean or useful breaker. I'd rather just look at, if you look at the 5-minute chart, down closing candle range, expansion up, touches the order block there. And actually, and if you've been on the streams, you know this before, but if we have this consecutive order block range, normally you're going to mark out this entire candle body to candle body, right? That's the entire bullish order block. Most times you can just use the premium end, and that's fine. If there's a volume imbalance present within the order block, so this 1, 2, 3, 4 candles, there's a volume imbalance here. There's also one here. The lowest candle, if we're bullish, you can then refine this down to, and this will be your new, not new, but more refined order block. So you could actually refine it down from that range, from this bullish order block, down into this range, extend this out, and then now you have a more precise area, and you can see the reaction off of that as well. Obviously deeper than you probably expect, but we're holding consequent encroachment of this inefficiency, and we also have the 5-minute order block that's holding price up, and we're starting to flip these. So as of right now, it looks fine. Didn't get the retracement I wanted right at 9:30. There's not really any SMT at the lows. Oh, I guess there is with YM, but I'm crazy about that. But yeah, any non-news day prior to a news day. So Thursday we have news, Wednesday we have no news. You can get more difficult AM session profiles. And normally what you can sometimes see is, if you have the PDF, it's going to be the theta or the beta profiles, but basically just 9:30 can manipulate, and we can kind of seek and destroy from the 9:30 open. We have 2 Judah swings, or what we'll do is we'll have a manipulation at 9:30, expansion up at 10, and then internal range stop sweep back up to the range. And then this is put in sometime during lunch. So it's a little bit more difficult rather than the standard open, low, high, close, open, high, low, close. But as of right now, it looks fine. I would like to see something like this, basically, if you want to continue bullish. If you just now joined, This is just standard Q&A / tape reading instead of back testing. So if you got any questions from the previous week or this week, or just in general, concept related, psychology related, you can put them in the chat and we can go over those, since I'm most likely not going to take anything today. So my attention can be divided. So this should be used as a reclaimed bisi, not an inversion gap. So we traded through it, come back up. We should be using this as support, not as an inversion. So next target would be the previous day high, and then the buy side up at 22.51. You see the candle bodies on the 5-minute are holding nicely, touches all the way into the order block, holds this inefficiency, printing above consequent encroachment. We do have a kind of a 1-minute SysD here. So nice little tap back into the reclaimed. There's also a volume bounce there, but knowing when we're going to use a gap as a reclaimed gap versus an inversion gap, it's a little bit more difficult. That's why you don't read them as just patterns, right? Because someone is going to see this and be like, okay, we traded through it, and then therefore it's an inversion gap. It's not true all the time. If the draw on liquidity is still higher when we're tracing into discount, for example, then this would be used as a reclaimed gap. That's why most times when you're looking for an entry pattern, if we're expanding up and we have multiple inefficiencies, most times you're going to be choosing to pick the one in discount, even though there is a gap up here, which means that sometimes you're going to be missing a trade if it runs into the premium gap and then expands. But in this case, you would like to see it reach into discount. And then instead of using this as inversion, trade back up, potentially find support on the premium end, and then continue the expansion up. Other times, if there's a gap that opposes the draw, so in this case, if we want to continue up into previous day high, this, same thing with this, I would like to see used as inversion. So like this entire candle range would be used as an inversion gap. And then you can start adding in the 3 PD ray rule if you use that. But so 950 macro here. We do have, I guess, SMT with YM. It's not the best. 5-minute order flow is bullish. We do have a tiny dealing range between, I mean, if you want to use this one, you have this inefficiency. We also have this large dealing range. So trading into the SysD and the reclaimed bisi. I want to see how we react off of this in here. This would be a discount fair value up. There's not really a clean breaker in here, and we're not really trading into a 15-minute inefficiency either. So I'd like to see it trade into at least just wick this discount gap. We did trade into the inversion there. Extend this out. Yeah, I finished watching all your videos, and since I heard Ephesians had some good info, which videos of Ephesians would you say helped you the most? I've only watched the standard deviation power of 3 videos so far. All right, so he has some premium videos that you can purchase. I don't know how much they are now, but he used to have some premium videos. I think this is the only, course I've ever bought was 2 of his premium videos. I would suggest both of those. I don't know what the titles are. Let me know after stream. Just remind me after stream, and I'll see if I can find the name of them. His one on the London protraction is going to be super important. That's probably one of the best ones. And then I think if you actually just look at any of his market recaps, solid. And then I don't know if his higher time frame analysis stuff is on YouTube or not, or if that's just for his private group. But yeah, his London protraction and then any of his market analysis where you can actually understand how he gets his bias and what he's taking to trade. He is one of the most like mechanical, like he just understands higher time frame like I've never seen. But I mean, if you're able to purchase those lectures, if he still has them, it's like, I don't know, $20 or something, which it's well worth it. And he's legit too, so I don't think there's any reason to fear, not getting value out of those. Yeah, for sure. I appreciate the nice words as well. Yeah, I think that's his model, right? The fundamentals of MMXM. I think that's his model video. Yeah, that one's good. So we should reach for a previous day high. And then hopefully this buy set up here. But we're tapped into the reclaim gap, into the inversion gap. Kind of at the SysD, I guess, would be here because there's a volume imbalance. But I don't know if there's any inefficiency. Nope, just a wick. And we do have some wicks in here, which are technically inefficient. And then up to the daily buy side. Zoom out actually to 4 hour. Also this larger wick. Split this in half. So you could get some reaction off consequent encroachment. Wicks are all inefficient. Okay, so just like this, closure relative to a wick will tell you strength or weakness. So something like this. This will be inefficient. Just because on a lower time frame, a wick will always have inefficiencies. So if we close, or if we just wick into a wick like this, that'll tell you the strength of price action most times. Same thing on the 1 hour chart. If we use this entire wick, extend that out, closing, we're still holding that wick. Same thing on the 15, you go and extend that out, there's the inefficiency, etc. Screenshot this really quickly. I'll send it to predictions chat. And there is your previous day high. Now you just gotta look for that buy side. Now what you could do is you could take the manipulation leg from this higher time frame market maker model over here. That still puts you up pretty far. I guess you could zoom out even more and look at another leg if there's anything significant like this one. And then you extend this out, -2. Also kind of lining up with multiple different standard deviations. I don't really use them too much. I prefer them on the 1 minute. So I'm not going to act like I know exactly what I'm doing with those higher time frame fib pulls, but something like this manipulation you could be using, or even this, extending that up, looking at 4 standard deviations, which we did just touch there. Not super important that you understand them. I think if you're to swing grading is a little more important. But like I said, now you have, if you zoom back into here, there's not any speed bumps in price from this swing high up to here, right? There's not a large inefficiency that you could be seeing. If I extend this over, I mean, you got this one, which we are already above. We have this tiny volume imbalance, but there's not really any crazy inefficiencies. There's not a huge gap. And gaps are going to be used as speed bumps on the draw, towards the draw on liquidity. So if you have a higher time frame bisi, and we're trying to reach for sell side to get through that bisi, we're going to have a little bit of, most times, a little bit of a slowdown or some weakness in price as we continue towards that draw. Something like yesterday, this is a fluke example where we have large inefficiencies and then we just expand all the way through them. But since we don't fill these in completely with buying and selling, we have to come back and return into it. Different conversation. But so I'm just looking at this wick, the higher time frame wick, marking a consequent encroachment. Also, how we close to the previous day high is going to be important to me. If we can continue expanding up, given the time dynamics, low put in here at 9:30. If we continue expanding into 10:15, even a couple minutes past 10 o'clock, then I would like to see the new high put in between 10:30 and 11. London close. Really after 10:30 would be fine. Anytime after 10:30. So we could expand up into here at 10:15 or something crazy. But if we form that new high and it's the wrong time, then you want to see the swing high formed sometime between after 10:30. So 10:30 right here. This would be your London close. So we're continuously closing above. You can pull up this chart really quickly and you can see how we close relative to the wick. I mean, so far, there's not a lot of inefficiencies. So what do you expect? Speed or speed bump? Well, the wick is inefficient, so we're going to get probably some reaction around consequent encroachment most times. And then obviously if we close up here, we have some inefficiencies we may come back and fill. But I like to just see expansion all the way up. And I also don't want to see just run this out. Whoa, voice crack. Run this out by a tick. It's got to be preferably with some movement because this is what a daily level. So we're going to run a daily level out by a tick. Most times not. It's going to be full expansion up. I'm actually curious. Where's that daily inefficiency? It's all the way up here. This is where I would mark this kind of wick out. Extend this to 50%. Boom, you have another profit objective there. Also go to the 4 hour. This 4 hour wick. We extend this out to the right. And then you have another target if you wanted to reach up. If it wanted to reach up into there. So you have this bisi now. So we should continue to find support as we move up. This gap may be traded into short-term discount. But what is this all the way up here? 281. Even. And this is 2251. But really, really nice expansion up so far. In line with the daily draw. And the time dynamics from London session. Classic manipulation. It's actually way cleaner than I expected. Do you have any insights on orienting yourself in a market maker model when there's lots of time distortion? That's a good question. A lot of times when we do have time distortion, so consolidation really, you have to zoom out, because this is something that Ephesians talks about, but fair value gaps are a function of time. And it's kind of mind breaking to think about this, but like, okay, I'll talk about time distortion and fair value gaps be a function of time later. But basically, my suggestion would be to zoom out, and then you have to find basically the last manipulation leg that that current market maker model is using, and normally that's going to give a little bit of a better insight as to why we're consolidating, because normally we're going to consolidate around 50% of some sort of dealing range. And if you can figure out where that is relative to the higher time frame market maker model, sometimes that can give you a little bit better orientation. Now, if it's time distortion, like on the 1 minute chart, and you can't really find where the draw is, then I would just say you just don't worry about it, because then we're starting a new cycle in the market, right? Because it goes consolidation to expansion, expansion to retracement or reversal, reversal to expansion, all that kind of stages of price delivery. So if it's really, really difficult to spot any true manipulation or where we are relative to it, normally we're just consolidating to start a new market maker model. And there's a picture I sent into notes and PDFs, I think. Yeah. It's the interbank price delivery algorithm. That's basically just a really, really good explanation. But really, the two functions of price is either to consolidate or expand. And retracements and reversals are both functions of expansion. So when you have consolidation like this, right? Like someone could argue, okay, this is time distortion. Well, what do you know about fair value, or what do we know about consolidation within a range? Well, there's going to be a fair value gap, but also, okay, this is consolidation. I'll show you an example. So this is consolidation. Expansion, is this expansion towards or away from the drawn liquidity? Towards the drawn liquidity. So what are we going to get as a result? Retracement. The function of retracement is to return into premium or discount. So consolidation, expansion, retracement down into discount, fair value gap right there. Expansion again. What do you expect after this last expansion? Consolidation. So we could either consolidate up here, we could consolidate up here after we sweep the buy side, which that would make sense to me. But that's a lot of like advanced stuff that you don't really normally use on a day-to-day basis, except maybe some of this price delivery stuff. But understanding consolidation and then what happens right after it, are we expanding, or are we expanding towards the draw or away from the draw? Then there's your either manipulation leg or expansion leg to find a retracement. And then that'll also give you more insight into what kind of setup you can use. So if we're consolidating before 9:30 and then 9:30 manipulates away from the draw, well, what kind of entry you're going to get? Most times a breaker entry. If we're consolidating before 9:30 and then we expand towards the draw, what kind of entry are you going to get most times? Continuation, retracement down into discount. And that's sauce right there. If you were to use that into your model and you have two different types of entry techniques, either a reversal entry or a retracement entry, that's going to be extremely beneficial, so you don't miss any of the high quality moves. You don't have to have an expansion entry, because this is going to be quite difficult and it's not optimal either way. And then the consolidation entry, really no point, you should be trading in consolidation anyways, so you don't even have to worry about that. The two kind of entries you need is a retracement or reversal, and then you can obviously frame a model around that, and all you need is a higher time frame, a lower time frame. Two things. You use two time frames. That's all you need. Yep, this will be posted on YouTube. So there's your buy side liquidity, bagged and tagged. W, yes sir. I'll screenshot this really quickly. Put it in predictions chat. I'll also send I'll send the execution as well. I do have one runner on for 2281 right up here, if you can reach that. Also, look at what time this is, 10:07. Now, normally, or since we're forming a high outside of the opening range, we're going to continue expanding into 1030. Now, given we don't have news today, what kind of profile could we see? We could see a deep retracement into here, and then it expands all the way back up. And normally you don't want to be sitting in deep retracements anyways. Sometimes what you can tell is if we didn't have any deep meaningful retracement on the 15-minute chart, we'll have a deep retracement, or if we missed an order block. So like if we were retracing into a fair value gap and we missed an order block, sometimes that can lead to a deep retracements as well. That's obviously another kind of advanced thing you can look for later on, but just a useful tape reading tool. And look at where we're closing relative to that wick. It came up here, closed inside the 25%. So we're going to reach for 50, came down, wicked right to the bottom portion of the wick, and then expanded all the way up to the buy side. Actually, no, I'm not going to be greedy today. I'll just close it out there. I'll be happy with that. If it runs up into this, it is what it is. But I'll post the execution into futures trades if you want to see it in the private group. There you go. I mean, pretty textbook, other than the fact that we didn't have SMT at the lows with ES and Y and NASDAQ. It was with YM, which you know how I feel about that. But 5-minute order flow in line, right? Retracement entry, tiny breaker, reclaimed bisi. If you look at the execution, it was right at 953 or so. So once I saw, basically, we're going to just treat this as a tiny breaker and the reclaimed bisi will be used. I just marketed long. And I don't really like to use limit orders. If you're wondering, I know some people ask, do I use limit or market? 90% of the time, I like to market in rather than limit. The only times I'm limiting in is if it's extremely, extremely high quality setup. So maybe like an 8:30 news day, and it's just a classic like 9:30 expansion. Hey man, most likely won't take a setup, proceeds to hit a nice setup. I mean, this was too clean to not take. It's not like it's an NFP or anything tomorrow. If there was NFP or something crazy tomorrow, I wouldn't even be looking at the charts. But the bias was like clear as day to me. Classic London protraction, New York expansion, draw on liquidity was pretty clear. I think everything in here was decently easy to read, especially given that we weren't even focusing on tape reading today. It was just kind of half my brain power using to see the setup. I think don't even got to worry about, you know, this kind of a loss. And you always want to be focusing on the ones that would be surprising if it lost. Same thing. Yeah, I was looking for the same thing, looking at New York to manipulate into this 15-minute bisi first and then expand up. But you always have to be flexible. It would have been perfect if it did that. I'd agree. But you always got to be somewhat flexible. You have to be an observer. You can't predict every single aspect. So yeah, that was the, let me see if I can pull up the screenshot for today. If you're not in the private group, I'll show you. So this is what I was looking for. Same bias going today, referencing yesterday's bias, which was bullish. Looks to me like a classic London protraction profile. Would like to see New York have a slight retracement into the 15-minute gap and then expand up into previous day high, open, low, high, close with standard time dynamics. We don't have news today, so be mindful of that. So not news means sometimes we can have a little bit more difficult price action, but overall pretty clean. And classic protraction is everything is either a open, high, low, close or open, low, high, close. And if you can figure that out early on, it's going to be so beneficial. Like to me, if I'd say, okay, there's one concept that changed the way I thought about the New York session, it's going to be open, high, low, close, open, low, high, close, and then you add in time. And that's like the cheat code, literally to the New York session almost every day. And I normally don't like to say that because obviously everything is going to be different. Every model is going to be different in how people look at the markets. But for me personally, that was like game changer. And maybe it's game changer for you, or you'll find something else that works. But so this is CE of, is this array that I have? Okay, it is. This would be CE of 4-hour wick center. Right? I think I did that right. Or is it CE of the daily wick? I don't see the daily wick. I mean, at this point, you could just be drawing your fibs out if you wanted to. Target all the way up here. Not really any of interest to me. It's 1013. We could continue to manipulate up into here, but we want to consolidate too. That would make sense because we finished out basically all the price delivery dynamics. We're going to go back to consolidation now. So consolidation, expansion, retracement, expansion, consolidation. And then consolidation will either lead into expansion up or below, and then that will lead into reversal, retracement, etc. And I'll go over why fair value. Anyways, I'll talk about it later. I have a question regarding yesterday's AM session on NASDAQ 1-minute chart. Let's go back to it. Right in here. The run up from 1040 to 1133 was so strong with no deep retracement at all. I'm wondering if there was any telltale signs beforehand that would indicate a fast run up to finish the market maker buy model. Two things to me: higher time frame draw on liquidity and the SMT at the lows. So if you look at, go to yesterday, the bias for me yesterday was bullish, given we did retrace basically all the way down to previous day low. There's nothing in there that was super solid, I think, taking a long after that. But we had SMT on the lows here, if you can see that. And drawn liquidity was higher. And we also had, on the 1 minute, it's a little bit easier to see, but we do have a breaker and a unicorn setup in here. Now, that being said, I would have still liked to see some sort of retracement on that 15-minute. Like, there's so many, these gaps, like we have 1, 2 gaps in here. And the fact that we didn't retrace when we met up into this is a little funky to me. But I don't think there's any way you could have expected this, like from here to here. I was not expecting that when I came to the charts after. That's pretty strong of a run. And sometimes there's not really any clear ways to anticipate this. But yeah, the higher time frame drawn liquidity being higher and the SMT at the lows, that's going to be the two most important parts. Because anytime we have SMT, that's going to be a turtle soup on the other one. And then if you have a turtle soup with the SMT, quick reaction after. Okay, so as we continue to kind of slow grind up here, I'll talk about Maddie's question a little bit more in depth. So time distortion is consolidation, at least in my mind. Same thing. Sometimes it's just time distortion is basically where you have a drawn liquidity. It's supposed to be met at a specific time, but it takes longer than expected, and we consolidate normally to build up more orders. So my understanding of time distortion is if the market maker model, if the market makers or the algorithm, whatever you want to call it, wants to push up price to buy side liquidity, and there's not enough orders up there for that to be for there to be clear handshaking, clear offset distribution, then what my understanding is, if we consolidate like right below this, normally we're going to have a bunch of buy side liquidity building above that, and then boom, we manipulate it, right? Eventually when the orders are building up there. Really like just general basic understanding. Now, fair value gaps are functions of time. If we had no time axis, think about what price would do. It would just be expanding infinitely upwards, right? Upwards or down. There would be no width of a candle, right? Because the width of a candle is based on an entire range during that time window. So if we had no time axis and it was just the y-axis, you'd have a single starting point and then just basically infinite expansion in one direction. So in order to mitigate some of that and make it where it's not a non-real number, you have the function of time as well. that being said, if you look at something like a fair value gap, like this on the 15-minute chart, there is time frame pairing, and whatever the lower time frame is to that specific time frame, you're going to have consolidation that builds above or below a fair value gap or buy side liquidity that will create orders and create this kind of inefficiencies in price. So if you look at this 15-minute gap, we go back to the 1 minute. It's not really a clear example actually, but it's hard to talk about this without like visual representation. But okay, here's a 15-minute gap. So in here, in order to create this inefficiency, you expand and then re-expanding again, right? It would just be 1. So then here we have to pause and then boom, we have an inefficiency. Then we expand, and we're going to pause a little bit. There's the inefficiency. So if you go back into this price action, you go on the 1 minute, there is consolidation above. And that would be your time distortion. And then what you can see is either manipulation into the IRL on the higher time frame, sweeping out the liquidity on the lower time frame, and then expansion up. So anytime you have a fair value gap, there's going to be lower time frame liquidity. Anytime you have buy side or sell side, there's going to be lower time frame liquidity, mostly in the form of relative equal highs or lows in that range. So consolidation is either building up for a manipulation into higher time frame PD array, either a IRL or ERL, and then expansion, or it's going to be consolidating and then expanding for a retracement back up. And only this will leave behind, like if you saw this kind of consolidation and then expansion up on a higher time frame, whatever time frame that's paired to this one will have a fair value gap below this or sell side liquidity, right? Because now there's a lot of orders below this, and this is a function of time, not price. But that's kind of, I guess, conceptually hard to understand sometimes, especially if you're new. But Ephesians also kind of explains that too. All right, we're still slow grinding up. This to me is evident that we may just come back in and sweep some of this down into here. Expand back up, but looks like consequent encroachment of the wick is the next target, and then obviously this swing high would be next draw, and then this inefficiency up here. If you wanted to get all the way up into there. But look how we're expanding into time now, 10:30. Right, we're slow grinding up. Now I do think we'll get some sort of retracement, possibly into some of this 1 minute, 1 minute swing lows. But got about what, 10 minutes left? Yeah, 10 minutes, 9 minutes. Only SMT was with ES on the 9:30 candle. Do we have SMT? Not really. I mean, kind of, yeah. But it's got to be, for me, it's going to be a 15-minute or 5-minute swing high, swing low. So this would have been, if we had swept this 845 low, I would have said that's SMT. But on the 5-minute, is there any? Not really. I mean, oh, I see. You mean like this? Yeah, then you could. Still not the best. So there's your retracement leg a little bit. Taking out those swing lows. It's either sentiment manipulation or accumulation of orders above or below a specific buy side liquidity because there's not enough. Like that would be my understanding of it. Or it's because we're kind of too ahead of the program and we have to stall out. So sometimes what you can see is PM session will have a lot of time distortion and the macro on close will finish out the day. I don't really know a whole lot because ICT hasn't really said much about it, and I think he's going to talk about it in his books. But it's either going to be like consolidation to create a gap, consolidation to create liquidity for us to then run, or it's going to be waiting for time of day to finish the program. Either macro on close or 930 expansion or important times of day where there's going to be a lot of liquidity in the market, right? Because it's all based on liquidity. Price always just the one function of price is just to seek liquidity at a specific time, and inefficiencies are just a lack of liquidity to get, or it's not lack of liquidity, but it's just resting orders that were never filled. So we do have this 5-minute gap as well, layered on top of the PDX. But remember, this is not any buy side. This is just kind of consequent encroachment of a wick. This would be the short-term draw, I guess. But you're looking at time of day now, 10:30 to create the high. If we form a high in here at 10:30, I would say that's all that's needed. If we form it at 10:40, that's all that's needed. So if we sweep this right at 10:30, that'd be fine. If we continue to expand, you just wait for time of day. Obviously, if we were to get a deep retracement first, and then it wants to manipulate and then come back up, I wouldn't even be interested in that. That's why I closed out really everything on the buy side. I don't know, be greedy on a day like today. We got rest of the week to kind of squeeze out the larger moves. And then tomorrow as well, I'm look between the stream will start right at like 9:30 or so, because we're gonna be looking between 9:30 and 10 to find that entry. And I think moving, if you wanted to, if you developed a nice model that's time based, moving your entry times based on news profiles is going to be most likely beneficial to you. If you're really new, I wouldn't say don't worry about it. But if you feel like you understand your model quite well, I've kind of moved around what times I like to look for an entry. So today we have no news. I'm going to look between the 950 macro, and that's the only time I'm going to look for an entry. 8:30 news, it's going to be between 9:30 and 10 o'clock, looking for either a continuation or some sort of reversal entry. Basically everything you look for, but it's shifted back. And then 10 a.m. news, it's just really anytime after the news. Very rarely will I be trading 10 a.m. news, and it's going to be before the news releases. I mean, sometimes you can argue an entry, and actually let me pull up my Notion really quickly, and I'm going to share the screenshot from yesterday's like write up, I guess. But what you should be doing is you should be tape reading, screenshotting while you're tape reading, and then after the day is done, going back in and screenshotting every single time frame you utilized in that session. So higher time frame to lower time frame. I would suggest daily, hourly, 15, 5, and 1 to start. And then if you use the 4-hour instead, then maybe utilize that. What's up, Crux? So here's the 1-minute screenshot if you want this. You want to quickly look at it. But there was a 950 macro entry short. It's not really the cleanest one, to be honest. And then there was another retracement after the news dropped, which I would have preferred as we continue down into previous day low. And you can see what time that swing high and swing low were put in. And then yesterday was like a textbook 15-minute IRL to 15-minute ERL. But nice reaction off this inefficiency. You have 3 minutes left. You'd like to see that new high form. So for example, if you close on this buy side, maybe you've missed an extra 20 points. But if we had a deep retracement and you got stopped out either in profit or at break even, it would have been the same kind of dilemma. So you're always going to have, there's always going to be feelings afterwards after you close a position, either as a win or a loss of, oh, I could have done this. But as a trader, you must always deal with the what is, the certainties. What already happened? What did you do? There's no what ifs, what could have been, what should have been. And whenever you're writing in your journal, post trading or post tape reading, minimize those words. Okay, the should have and the could have. Oh, I could have seen this. You can be, if especially if it's critical. If it's like, okay, for tomorrow, if this kind of thing forms, I should be able to see this, or this one was really obvious. It's just a kind of a flaw in my own analysis that it's clear to me. I should have seen it. But never overly be critical with the what ifs, especially in trading and in life in general. So if you can kind of accept that there's always going to be something better and you don't compare your progress to someone else's, it's way easier to progress than this. And dealing with the certainties. So if you closed out, boom, that's it. You can turn off the charts. Anything after that is just noise because you don't know what's going to happen after that, especially if your model is already finished and your session is already finished. Yes, hovering on this new day opening gap. Let me see. Oh yeah, it's just, wow, that's terrible price action. You got lucky on NASDAQ. Now we're seeing that deeper retracement. Exactly why. Sometimes you don't want to hold. But down into the 5-minute gap. Anyways, so it's 10:30. You would expect a new high by 11 o'clock, maybe by 12, but preferably by 11. So I'll go ahead and wrap up the stream here. If you got any questions I didn't answer or you got anything after the stream, let me know. Shoot me a DM or you can put it up in general chat and just ping me. Let me actually screenshot this one last time before we end it. So looking for new timed high. All right. So yeah, tomorrow 8:30 stream. It's not 8:30 stream. 9:30 stream, and then Friday most likely a stream as well. It depends on really how the weekly dynamics are playing out. If Thursday is a really large expansion, I'm gonna play Friday as a retracement. If Thursday expands and then retraces going to end of day, then I probably won't stream on Friday. Actually, we will stream on Friday. I'm gonna be busy this weekend. I'm gonna be out of state. I may actually do a vlog with Naden. We'll see. IRL content. Who knows? Hey, if you're in New York, pull up. If anyone's in New York, maybe we can run out. We can go to dinner or something. But yeah, we'll do a backtesting stream again on Friday instead of the Saturday weekend stream. No, I'm not in New York. I'm gonna be flying out to New York on Saturday. So if we got a squad, then maybe we could all get dinner or something. We'll figure it out. If I don't have any other plans, but I'll let you guys know. Anyways, I appreciate you guys joining, and hopefully you learned something from the stream. And I will talk to you guys, Lord willing, tomorrow, bright and early at 9:30. See you guys then. And obviously, if you are new here, I especially appreciate you for taking your time out of the morning and joining the public stream. I'm to Czech Republic. All right. So take care. Do the things that are necessary to succeed. Journal, screenshot, and obviously take care of your body outside of trading. Get outside and get some sunshine if you can. But I'll talk to you guys soon, and peace.